Yesterday we completed 1.1 of this question paper. It is the June exam that was written in Gauteng. Now I'm going to go to the first question, which will be 1.2.1, where they want us to calculate the missing amounts denoted by Roman figure 1 up to Roman figure 4 on the fixed asset note. I will quickly browse through the paper just for me to see what they're talking about. So I've got vehicles, there are 452. I've got equipment, but that equipment balance is at the beginning of the year. I've got accumulated depreciation on vehicle and equipment, both at the beginning of the year. So in the trial balance, that is all I am given. And I'm going to look for an adjustment that relates to tangible assets. And it looks like it will be C. So they want us to calculate that number 2, number 3, and number 4. I feel like number 3 is straightforward because you just take this, you minus that. That's how you get number 3. With number 4, I'm not sure. With number 1 as well, I'm not sure. But I think it's also straightforward because, if this is X, right? When you take that X and you add it with 1,500,000, it should give you cost at the end. That is because for land and building, there's no depreciation. And because for land and buildings, there's no depreciation, you just look at the cost and you will notice that during the year, there was land and building purchase. According to this, I haven't even read the statements yet. And if I was to calculate X, I will just say X plus that 1.5 million should give us 7,890,720. By now, guys, you should know how to solve for X, right? Even if you don't know how to solve for X, you can always use your calculator. If you've got this type of calculator, normally you refer to it as AP math calculator. You just press X over there and then you add 1,500,000 and then alpha equal sign. It'll give you 7,890,720. And you press alpha and then you press equal sign. Actually, you just press, okay, it doesn't work. You need to solve. So I'll say that calculate, which is not wrong, which is, yeah, there it is. It'll give us 6,390,720. Can that be? We'll see. We'll see. Okay, so that's how you will calculate it using a calculator. But I'm not going to do it that way. I feel like those two were quite easy. But anyway, let's read the information to figure out what is it that they want. I already have Roman figure number 1. I already have Roman figure number 3. I'm just missing Roman figure number 2, but I'm going to do everything step by step, okay? Now, they say here, land and buildings were purchased during the financial year for 1.5 million. This has been properly recorded. We saw that in the tangible asset note. So for me, that'll enable me to calculate Roman figure number 1. So what I did is I basically started with my timeline, starting from the beginning of the year until the end of the year. We know that at the end of the year, our land and buildings amounted to 7,890,720. We purchased the land and building during the year. So meaning that there was an increase in land and building. So if we want to go back to what it was, we need to take the end of the year and simply minus what was added, which will be that 1.5 million. And it will give us the cost of land and buildings that was purchased, which will be 6,390,720, and you will get a continuous for that. That is for roaming figure number one. So as I've done there, this will be X. When you add it with 1.5 million, it should give you that 7,890,720. And to solve for X, you'll just say X is equals to 7,890,720. You minus that 1,500,000, and it'll give you this. So it's up to you how you want to calculate it. I calculated it that way. I found it to be a little bit easier. Makes sense too. I just hope it makes sense to you. All right. I'm going to show you what we need to calculate next, which is number two. Number two relates to vehicles, and this is the information that you got. Read through it. I'm going to give you like a minute. Let me give you 2 minutes. Now it says here, depreciation on vehicles is calculated at 20% per annum on the diminishing balance method. The total depreciation for the financial year amounted to 83,200. We saw this, it was given to us, right? And then they say on the 29th of February 2024, which is right at the end of the year, a vehicle costing 200,000 was sold for cash. Okay, cool. For 118,000. So this 118,000 is the selling price. Great. The business made a loss. Oh, so this is a loss. And by giving me this information, they made it quite easy. Understand, if they wanted, remember there, let me just show you wrong figure number two. Wants us to calculate the carrying value of the asset that are sold because they said disposals at carrying value. And there are two methods for calculating carrying value. So we were given cost. So you can use cost minus accumulated depreciation to get the carrying value. But from the information that we have, we only have depreciation. We were not given accumulated depreciation of this vehicle that was sold at the beginning of the year. And we were also not told as to when this vehicle was purchased. So it's either they give you carrying value, it's either they give you accumulated depreciation at the beginning of the year, or they tell you when that asset was purchased and they didn't give you any of those two. which made it impossible for me to use that method to calculate carrying value. Which method am I talking about? It is the cost minus accumulated depreciation. I can't use that because I don't have accumulated depreciation. And they didn't give me enough information to calculate accumulated depreciation. Yes, they gave me the depreciation rate, but they were supposed to tell me at least as to when this asset was purchased. They told us when it was sold, but they didn't tell us when it was purchased, so that we can calculate depreciation from when it was purchased up to the date of sale. And then we can calculate carrying value at the date of sale. So it was impossible for us to do that because they didn't give it to us. And if they don't give us that, they were at least supposed to have given us accumulated depreciation of this vehicle that was sold, of the vehicle that was sold, not all the vehicles, but of the vehicle that was sold at the beginning of the year. They only gave us accumulated depreciation of all vehicles. They didn't give us accumulated depreciation of this vehicle that was sold. So it made it impossible for us to use that method to calculate carrying value. What is the second method? The second method is the method that I have to use because I believe we're given enough information. For the second method, you need the selling price, you minus the carrying value, you will get either a profit or loss. So at least we have the selling price, we have the loss. The only thing we are missing is the carrying value. So you have to write the formula down. So what is the method again? The method will be selling price. It was given to us. We don't have the carrying value. I'm going to put the question mark on that. And they gave us a loss of 10,000 Rand. And I'm going to put that in brackets. Now, for me to get the question mark, I'm going to take this and minus what I've added. It will give me carrying value. So I'm going to say minus 10,000 minus 818,000, and it will give me the carrying value, which will be 128,000. That's how you will get it. 2 marks for that. Let's go to Roman figure number 3. That one was easy. We just take 452,000, you minus the accumulated depreciation. That's how you get the carrying value. Carrying value is cost minus accumulated depreciation. Cost was given as 452,000. Accumulated depreciation was given as 247,200, and it gave us the carrying value of 204,800. Let's see Roman figure number 4. Roman figure number 4 wants us to calculate the total depreciation on equipment. For me to be able to do that, I need more information, which is only the last part. They say depreciation on equipment is calculated at 15% on cost price. I like that. The company decided to invest in a new equipment since the equipment was very old. Interesting. The new equipment was bought on the 1st of November 2023 at a cost of 150. So for you to be able to answer this, please draw the timeline, which is what I did. Beginning of the year, end of the year, and the day this new equipment was purchased. Cost at the beginning of the year was 790,000. Cost of the equipment purchased will be 150,000. I am going to start by depreciating the old equipment. We know that the old equipment, it was not sold, therefore it was used for the entire financial year, which is 12 months. Now, even though they said we depreciate equipment on cost price, most students don't do this. They don't calculate the carrying value of that asset at the beginning of the year. It doesn't matter what type of depreciation method you're using. You need to calculate carrying value at the beginning of the year. You were given the cost of the old equipment, which is 790. You were also given accumulated depreciation of the old equipment, which is 710. Now, to get the carrying value of the old equipment, you will take 790,000 minus 710,000. It'll give you a carrying value of 80,000. We will not use 80,000 to calculate depreciation. We will still use 790,000. So depreciation for the current year will be 790,000 multiplied by the depreciation rate of equipment, which was 15%. That will give you 118,500. Now you will start comparing. Current year depreciation cannot exceed carrying value at the beginning of the year. And here it does. If it does, you limit it to carrying value at the beginning of the year minus 1. So we can't recognize the whole 118,500 as our depreciation on equipment. We are going to limit it to carrying value at the beginning of the year minus 1. We are going to limit it to 80,000 minus 1, which is 79,999. That will be our depreciation for the current year. Then I'm going to move to the new equipment, which was purchased on the 1st of November 2023. This equipment was never there. We've just had it. So it doesn't have accumulated depreciation since we've just bought it. Meaning that we had this equipment from the day we bought it until the end of the year. It wasn't there at the beginning of the year. I'm saying this because I will normally ask students as to for how long did we use this new equipment? And some of them will say 8 months. And I'm like, but how? Did we use it from March until November? No. Why? It wasn't there. We didn't have it. We only had it from the 1st of November. So we are going to use it from November, December, January, February. That gives you 4 months. So in the current year, the new equipment was used for 4 months. So when we depreciate the new equipment, it doesn't have accumulated depreciation. And there was no need to even calculate the carrying value, but I calculated it either way. So when we depreciated, we are going to take the cost price, which is 150,000 Rand, multiplied by 15%, which is the depreciation rate, multiplied by 4, which is the number of months we have used the asset, and you divide it by 12 because 15% set per annum. So it's for the whole year. So you will divide by what you have, which is 12. And that will give you the depreciation of 7,500. This is only depreciation of the new equipment. Now, the depreciation amount they ask for is for all equipment. So you are going to take the depreciation of the old equipment and add the depreciation of the new equipment to get the depreciation of all your equipment, which will be 87,419. I don't know how they marked this in the final exam, but this is how I would actually mark it. Oh, it looks like that is okay. Let us check what's next. what will be coming up in the next video, we will be completing the statement of comprehensive income, which is your income statement for the year ended 29th of February 2024. Certain amounts have been entered in the income statement. So to prepare the income statement, you clearly need all this information over here. You might need some information from the financial position. So what type of information would you need from the financial position? This you will need it for provision for bad debts adjustment. This one you will need it when you calculate your income tax because it represents your provisional payments. So we need to make sure that provisional payments doesn't actually exceed your income tax. If it exceeds your income tax, it means you paid more. If it's below your income tax, your final income tax, it means that we still owe SARS the difference. Okay, so we will use those two. We might use trade debtors, but I don't see it here. I know that trading stock, we will use it to calculate trading stock surplus or deficit. Depreciation, we have used it already. So all of that was kind of used because we used it to calculate depreciation. And that's it. That is it. For the income statement, that's what you will need from the balance sheet. And then the rest will come from nominal. I don't see any debtors allowances here. Please don't make this mistake. When you see ordinary share dividends, these are interim dividends. Remember, dividends are not recorded in the statement of profit or loss. Do not record that in the statement of profit or loss. We good. And note that this is income. This is bad debts recovered is also income. And then interest on fixed deposit, it's income. But we write it there at the bottom in our income statement or statement of profit or loss. Okay. That's all you will need, and then everything will come from your adjustments. Okay, I think this is all we need to prepare that. Otherwise, this is about tangible assets, and this is on shares and dividends. So this one, we will not need it when we prepare the statement of profit or loss as well as the related one. For now, we will need everything up to here. If you get stuck with any of these adjustments, please check out a video written adjustment. I will put the link under description for you to check it out before you try this one out. Thank you again. Please don't forget to like, share with your friends, and subscribe.